Good morning, good afternoon, everyone. Welcome to Ask a Professional. I'm so glad to be here. As per usual, my name is Moy Fung, and I get to host today's session. As you all know, Ask a Professional is a series of BBPA series, that offers ongoing discussions with industry experts in various fields. And today we get to speak with Ricardo Williams about festive spending. Right. So we will get into our discussion in just a few moments. But before I do that, I'd like to tell you about our amazing giveaway. It's the Zuka earbuds. And if you've joined us before, you would have heard about it. Zuka earbuds, if you participate in the survey after this session, you get an opportunity to enter into this draw where you can win the Zuka earbuds. The winner will be announced at the end of the sessions, which will be in just a week or so. But in the meantime, I do want to say hello to everyone who is here, our audience members. You still have time to share this link with your friends, your family, your colleagues. We're talking about festive finance, actually, smart holiday shopping. I think I said that right. Smart holiday spending. And Ricardo Williams, who is with BMO, and they're doing some amazing work there at BMO. I do want to take an opportunity just to invite Ricardo to our virtual stage. And then while I do that, or while he enters the stage, I'd like to read his bio. So Ricardo joined the financial industry in 2017. He started at the Customer Contact Center and quickly discovered his passion for providing high quality service for his clients. What began as a job straight out of university led to a career which has seen Ricardo take on progressively senior roles over the years, from investment advisor, financial advisor, business advisor, and now branch manager at BMO Financial Group. Ricardo leads a passionate team of bankers in the downtown Toronto market. They help their clients and grow the good through tailored advice that help clients reach their financial goals. Ricardo holds a Bachelor of Arts honors degree from York University and is also certified financial planner, which is the gold standard designation in the financial planning industry. Ricardo, how are you doing today?
Hi, Moy. I'm doing well. Thank you for that introduction. It's really great here to be here with BBPA, and looking forward to this discussion. I'm really passionate about financial literacy, so I think this is a very timely discussion.
Well, thank you so much for being passionate about financial literacy, and I thank you so much for being with us today. We had an opportunity to speak just a couple days ago,
Mhm.
and you shared some of the amazing work that you were doing at BMO. And I'd like you to talk a little bit about that. I know you do have a presentation, but
Mhm.
I'd love to hear just from because oftentimes the bio is such high level, right? I'd like to hear just tell our audience members about the work that you're doing at BMO and just the great programs that they have for entrepreneurs.
Absolutely. So I joined BMO about 2 years ago, and I'm the branch manager at the Front and Berkeley branch in the downtown Toronto market. And I am also the market champion for the Zero Barriers program. So the Zero Barriers program is a purpose program that focuses on Black and Indigenous entrepreneurs, recognizing the historical challenges that these communities have faced. So our goal is to be able to break down those barriers through partnership with these entrepreneurs by providing funding, education, and partnership through our various partners. So this program was launched in 2022, and it was actually relaunched this year, and the name changed to the Zero Barriers program. So we've been doing some great work with our Black community, and it's such a rewarding experience to be able to meet these entrepreneurs within the community and be able to help them to reach their financial goals. I'm also the co-chair of BMO Empowered, which is a advisory group within Bank of Montreal, who focuses on retaining, recruiting, and developing our Black talent. So it's a super important initiative because we recognize that within our organization, there is an opportunity to be able to foster diversity and inclusion while making sure that our workforce is reflective of our communities.
That is absolutely amazing. Can we just give him a virtual round of applause, please, just for the incredible work that he's doing? And kudos to BMO as well for the incredible work that they're doing for the community. So thank you, Ricardo, for being with us again today. And without further ado, you can get into your presentation. I know it's just a few slides.
Yeah,
Once you go through your presentation, we'll come back on screen and we'll answer some questions or ask some questions, okay?
absolutely. Thank you so much. All right, so I'm just going to share my screen here. Right.
While you're sharing that, Sarah says, proud of my bank for hiring hold on. Proud of my bank for hire. Oh gosh, all these pop-ups. Proud of my bank for hiring talent like Ricardo. Yes,
Love to hear that. Love to hear that. Okay, and can everyone see my screen?
I can. I certainly can.
All right, wonderful. So, going to get started. Of course, the topic is festive finance, so smart holiday spending. So, like I said, this is a very timely topic given that we're in the holiday season, and I think it's important to talk about this because we realize this is a time of year that a lot of spending happens, and we want to make sure that's rational spending that's happening and doesn't put you in any financial difficulty. So, and it's in line with my passion for financial literacy, and I believe that given that so much money is spent in the holidays, it's a great time to reflect and analyze what our strategy is with holiday spending. So, what are Canadians saying about holiday spending? So, a survey came out from Deloitte that finds that we've reached a 5 year low in terms of holiday spending. Canadians are on track to spend about $1,347 over the holidays. And if you ask me, I think that is a lot, even though it's a 5 year low. And we've seen Canadians express some concerns when it comes to holiday spending. So, for example, 67% of Canadians are worried about a recession, 55 are worried about rent and mortgage increases, and 33% are concerned about paying off holiday gifts. And this is from an article that was released just a month ago from CTV News. And it kind of highlights the economic environment that we're in, right? So with COVID, we saw low interest rates, right? Because the economy shut down. So the government dropped interest rates to kind of relieve that pressure. So it was a lot easier to borrow at that particular time. So we saw a frenzy in the housing market. We saw a lot of purchases and record numbers of real estate sales. Now, what we're seeing is that the environment has totally changed, and we've transferred from a low interest rate environment to a high interest rate environment. So now we're seeing mortgage rates at around 5-6%. We're seeing anything linked to the prime rate, which is the Bank of Canada rate that the government sets in terms of lending. So things like mortgages, lines of credit, those are going to be tied to the prime rate. And the prime rate right now is at 7.2% across all the big five banks. So anything tied to the prime rate, we're going to see increased borrowing costs. And what this spells is that it's a tough time for Canadians, right? Because of the increased borrowing costs and also inflation, which is the cost of living increasing. It makes our budgets very tight. And that's why it's so important to kind of review what our strategy is, and instead of spending to spend from a traditional standpoint, we should really kind of self-reflect and see if it makes sense and it's within our budget. Now, in terms of considerations when spending in the holidays, so a couple of things that you want to consider, right? So you want to do a self-analysis and make set expectations for yourself, right? So, for example, credit card debt. Are you spending so much that you will have to put these expenses on your credit card and carry a credit card debt into the new year and throughout 2024? We know that interest rates are at an all-time high, and that leads to higher mortgage rates and higher borrowing rates in general, right? We know inflation is a concern, right, with increased food, rent, and gas prices, right? So these are all things that we want to consider when we're making holiday spending. Because if you look at my previous slide, to think that Canadians are going to spend $1,300 in the holidays, which is just really 1 month, right? That's a significant amount of money, especially for somebody who is, making 40 or $50,000. That's a lot of money. So these are kind of the considerations that you need to address when you're doing your holiday budget. And so let's talk about what should my holiday spending strategy be, right? So anything with regard to your finance, you always want to have a strategy, right? Whether it's an emergency savings fund, or you're saving for retirement, or you're saving for that vacation with your family, you need to have a strategy. And it's the same thing with holiday spending, right? You do need to have a strategy because you're spending a significant amount of money, and also I would argue time, thinking about what you're going to get for your loved one, right? So the first thing we want to do is we want to do self-analysis, right? Where am I in my financial journey, right? So everybody's financial journey is going to be different. You could be someone that just paid off your student loan, or just paid off a car loan, and then you have a freer, cash flow on a biweekly or a monthly basis. Or you can be somebody that, you're struggling with credit card debt. And this is that self reflection that you have to do and determine where exactly you are in your financial journey. Next thing you want to do is you want to set a budget for yourself. So it doesn't have to be anything fancy, but your budget should reflect your financial situation, and it should also reflect that you're able to pay off these purchases when you make them, right? So you should sit down, think about your monthly expenses, right? So the things that are your fixed expenses, such as your mortgage and utility bills, and then think about what excess cash that you have, right? Because, like I said, with the holiday season, it's 1 month, but the world continues after the holiday season. So we have to make sure that we are in budget and we're not overextending ourselves. Next thing we want to do is recognize these retail tricks, right? Buy one, get one free, or buy two, get one half, right? We all see these strategies, or all see these promotions, excuse me, when you walk into stores, right? So are these actually necessary, right? Is it necessary for you to indulge in these retail marketing strategies? Because that's what it is, right? To get you to spend more money. So be mindful when you go out there. With these retail stores, they have strategies to be able to entice consumers to spend more money. So it's important to be able to identify when something's a good deal versus when something's just trying to have you spend more money. Next thing we want to do is we want to set expectations, right? So like I said, everybody's financial situation is different, right? So some people will be able to spend that $1,300, not a problem. And some people, it's going to be more difficult for them to be able to spend $1,300 in 1 month on holiday gifts. So sit down with your loved ones, set the expectations, whether you're going to be able to give them that dream holiday gift, or maybe you have to do something that's more conservative, right? Maybe you have to make a gift, or do a gift card, or anything like that. And setting the expectations is going to help you, because people are going to understand that if you're not able to, you know, uh, do this huge spending on the holidays because you're looking to reach your financial goals, I'm sure that everyone's loved ones will respect that, right? The next advice I would give is that we should have a holiday fund. So I know Christmas is a huge deal for many Canadians across the country, including myself, right? I grew up loving Christmas. Everyone loves to wake up in the morning. I'm from a Jamaican family, so we'd wake up in the morning, open presents, and have a classic, Jamaican Christmas style breakfast. Anybody who is Jamaican or part of the community know that's a very delicious breakfast. But you want to set that holiday fund up so that when December comes, you are not using your credit card, you would have already been saving throughout the year. And that can be something as simple as $100 biweekly, right? So on a biweekly basis, that means that there's going to be 26 periods within the year that you can put $100 aside. And by the time December comes, you would have had $2,600. And then you can kind of enjoy your holidays, to be able to buy those gifts that your family is looking forward to. So I think this is one of the most important things, is that we have to have a strategy, right? And it doesn't start in December, but it starts in January, and thinking about exactly what our priorities are when December rolls around. So I'm gonna stop there, and I'm gonna send it back over to Moy. Just got some sources here, in terms of some of the data that was used for this presentation, and I'll kick it back to you, Moy.
Absolutely. Thank you so much for that. It was short, but it was really, really profound. And big up yourself, by the way. I'm a fellow Jamaican, as we found out yesterday. But no, you can stop sharing the screen, and if you can just come back to
Okay.
the virtual stage with
Absolutely.
me, we will take question and answer from our audience members. So please feel free once again. Ricardo Williams is branch manager at BMO, and he's here to answer all your questions. We're talking about festive finance, right? I love the fact that you said it's setting up a holiday fund. Oftentimes we don't think of those things, right? We're so reactive. Like we know Christmas comes every year, but we wait until Christmas to figure things out, right? Especially for those of us who are very big on Christmas. I love that idea. Now, given the current market, $100 could be much for many people. Do you have
Yeah.
any other recommendations in terms of set in terms of putting money aside for the holidays? Any other
Yeah, yeah,
recommendations?
absolutely, absolutely. So I think, like you said, $100 every 2 weeks could be a lot for someone, right? So again, it goes back to your financial situation, right? So you have to do an analysis of your financial situation to see what exactly you can afford. So maybe $100 is too much. Maybe you want to start off with maybe $100 bi-weekly is too much. So maybe you want to start off with $100 a month, right? So $100 a month going into a high interest savings account. Right now, high interest savings account, interest rates are high. So you can get maybe 4 or 5% on a high interest savings account. And you can put that $100 on a monthly basis. When December rolls around, you're going to have $1,200 plus all the interest that you earn from the high interest savings account. So again, looking at your financial situation, seeing what you can afford, and make sure your priorities are in order.
That's beautiful. Thank you so much for that. I'm just reminding our audience members to, first and foremost, raise your hands or put your questions in the chat. And in addition to that, share the link. Share the link. Festive finance is a real thing, right? I think for the most part, we all sort of celebrate the holidays in some fashion. So there's a lot of spending regardless, whether it's just, some of us, it's new furniture. If you grew up in a Jamaican home like Ricardo and myself, sometimes it's new furniture. It's a lot, the food, the grocery list is much bigger during the Christmas holidays. But we often get time off too from work, even if we don't celebrate Christmas. So we often get time off, and we're celebrating nonetheless. We're spending time with family. We are drinking more, eating more. So this conversation is definitely needed. So again, feel free to share the link and to put your comments and your questions in the chat. I think I'm going to go on to, and I do like the input and what you've shared in terms of, the budgeting part of it. Let me get to my questions here. Now, in terms of, what I like too, what you said about the strategies that the retailers use to basically to get us. I think recently I saw that in Shoppers Drug Mart because I collect points, and I'm actually like becoming very rigid as it pertains to my budget as well now. And there was some sort of deal, like if you spent, I don't know, it was only like $20 or more. If you spent $20 on a particular brand, then you can get like 10,000 points or something like that. And I was, after doing the calculation, which I'm doing a lot more now, after doing the calculation, I was like, okay, no, a strategy. And I'll just leave that alone because I don't really need that much more sugar in my life right now. So, Michael Pinnock, I'm in Jamaica hearing loud and clear. Big up yourself, Michael. Enjoy the sun for all of us. So glad to have you. It's always wonderful to have you. And I love to hear your voice. So if you have any questions, feel free just to, or any comments as well, feel free to share. So let me go back to my questions as well. So in terms of, let's go to debt management. What recommendations do you have for managing holiday related debt? Because the reality is the
Mhm.
economy is volatile right now. You talked about the interest rates, you talked about all of that. Now, most of us don't have it within our budget to
Right.
do all this holiday spending. So there will inevitably be debt. What
Mhm.
recommendations do you have for managing holiday related debt?
Absolutely. So I'll say two things about that. So the first thing is this. So when it comes to credit cards, right? So I want our audience to understand. So credit card is not the enemy, right? So credit card is one of those tools that you can use in your financial toolbox to be able to help you get to where you want to be. So, for example, with credit cards, they usually have a reward structure, right? So we really only use credit cards for the rewards. So, as an example, I have a BMO credit card, right? Some great advertisement for BMO. I have a BMO credit card and I use my credit card, I get travel points, right? And I use my credit card for all my purchases, whether it's a large purchase or I'm just buying a coffee, and then I collect those points. As soon as I make those purchases on the due date, I pay my balance in full, right? So you're basically using the credit card, putting all your purchases on the credit card, and then on the due date, you're making sure that you have all the money to be able to pay your balance in full. So we're using those credit cards because of the reward structure. So we're benefiting from the rewards, and then these rewards that you build up, then you can either use them maybe for a holiday gift, right? Because you can redeem your points, or maybe you use them for travel, depending on what type of credit card you have. So you can have a travel card, you can have a cashback card, you can have a air miles card, whatever the reward structure that you have. So credit card is not a bad thing, but it's about how we manage um, the spending on our credit card. The other thing, Moy, like you mentioned, it's a tight economy and debt is going to be inevitable, right? Especially for those consumers out there that Christmas, they don't care. They want to make sure that their family have a good Christmas. So what do you do with this debt that you're taking on, right? So what I would say for that is that we should never be carrying a balance on a credit card, right? So if there's ever a reason why you will be carrying a balance, maybe you want to look at getting a line of credit, right? So a line of credit is a credit facility similar to a credit card, but it's lower interest. So line of credit, there's no reward programs for a line of credit. It's a low interest product and it's revolving. So with a line of credit, it's for medium to long term purchases, and then you work on a monthly basis to be able to pay that balance down. And it's actually going to be favorable for you in terms of your credit bureau reporting, because once you have a credit card balance and you're carrying that balance from month to month, that's going to impact your credit. Whereas once you have a line of credit balance and you're carrying that balance from month to month, the credit bureau kind of understands that lines of credit are there for those long term purchases. So it's going to have a significantly less impact on your credit bureau. So if you have access to a line of credit, you know you're not going to be able to pay off those holiday expenses. Move the balance to your line of credit as opposed to your credit card.
Great. Thank you so much for that. I'm just checking our chat here. Okay. Okay. So Aladar is a new student. Okay. Well, thank you so much for joining. Let's talk a little bit about gift giving strategies. What are some
Mhm.
thoughtful, I'm not, I hope you can answer this. What are some thoughtful yet budget friendly gift giving ideas? And how
Yeah.
can I avoid, or how can someone avoid the pressure of to overspend on gifts?
Yeah, that's a good question. I'm personally bad at gift giving, so I don't know if I can help you with that. But what I can comment on is that when it comes to pressure, right, financial pressure, again, we have to do a self-reflection and you have to set expectations, right? So
Yeah.
everybody's financial situation is going to be different, right? And if you are on your journey to financial freedom or to just improve your financial standing, you need the support of your family and you need the support of your network. So what that means is reaching out to your close ones to say, hey, listen, the holidays are coming up. I just want you to know I'm being a little bit more frugal as I have, I have things that I want to be able to prioritize in terms of
Yeah.
my saving strategy or paying off debt, whatever that is, right? So it's about doing that self analysis and setting that expectation. In terms of having, what we can do, in terms of gift giving and not breaking the bank on gift giving, I would say be practical, right? For example, socks, right? Sweaters. Um, People love handwritten cards and notes, gift cards, LCBO, or maybe that your family member loves electronics and you can buy a gift card to an electronics store. So these are just some examples that you can do to kind of mitigate some of those societal pressures that we get to spend on holidays, while also still being thoughtful, right? And again, the consumer will know what would resonate for their families and their close one than I would, right? So it just think about what your close ones like, what will resonate, what would be meaningful to them, and that could kind of guide you of the actual gift to be able to give them.
I love that. Thank you. And SS says, I love giving gift cards. It's a much easier way to stay within my budget, which is great. And I think in your presentation, you did mention something along those lines as well. You kind of went a little bit into just financial goals overall.
Mhm.
Um, how can holiday spending align with the overall financial goals? I know you touched on it just quite a bit. Like how should we adjust our savings or investment strategy during the holiday season? Is that something you can answer?
Yeah, that's a great question, and I think it's not either or, right? So
Mm.
I think you like again, I keep going back to the reflection. So holiday spending, it's a part of life, right? It's a part of being Canadian. Many Canadians celebrate Christmas, right? But you just have to have a plan, right? And when holiday season comes, if you have a saving strategy where you started in January and now it's December, right? And you had been saving for the holidays in from January, you would have had 12 months to be able to save up. I don't think that we should be deviating from our saving strategies that we have just because it's the holidays. I think what we should be doing is we should be making sure that the holiday spending is aligned with our overall financial wellness. Because at the end of the day, January 1st will come, right? And you will be looking at those statements, whether it's your credit card or your line of credit statements, and that kind of, happiness that the holiday brought, that will subside when the new year comes, right? So I think we have to just be sober in realizing that and being realistic when it comes to these discussions.
No, that's good. And I think that's a great word. Sober is a good word to use. Now, let's talk about post-holiday spending. So post-financial, I guess, post-holiday financial recovery.
Yes.
What steps can someone take to recover financially after the holiday season? Are there strategies to minimize the impact of the holiday spending on long-term financial plans?
Yeah. So again, I highly recommend that everybody should have a credit card with a reward program, right? Whether it's cash back or travel rewards. Here we have BMO rewards, right? Because if you use your credit card throughout the year for all your purchases, right? You would have then been able to build up those reward points. So when you do your holiday spending in the new year, you can redeem your points and actually get money to be able to pay some of that credit card balance off, right? The other thing that I would recommend, and this is specifically for individuals that like to give to charities, right? So unfortunately, because the economy is tightening, so what we're seeing is charitable donations have decreased as well as people's pockets get
Mm.
tighter, right? But with charitable donations, you actually get a tax benefit, right? So anytime you make a charitable donation of $50 or greater, you get a tax slip that you can then claim for your taxes. So those are a couple things, especially I know people big within the not-for-profit space, as an example, or registers charities. This is something that you can consider to kind of minimize the post-holiday spending.
Hmm. Are there any other tax in terms of implications that people should be aware of and related to holiday spending? I know that's not an implication, that's an actual benefit, is what you're saying. But are there, in terms of tax implications, are there any that we need to consider related to holiday spending?
No, no, I wish, but other than donating to a charity and getting your tax slip, there's no other consideration, I would say. Yeah.
Mm-hmm, mm-hmm. And in terms of credit scores, um, I mean, the holidays is really just 2 weeks. How can holiday spending affect my credit score, and what steps can I take to protect it, or can someone take to protect it?
Yeah, that's a great question. The holidays can have a huge impact on your credit score, right? So, if you're making purchases that are not from your checking account, you're putting it on your credit facilities, whether it's your credit card um, or line of credit. Line of credit, it will impact you a lot less because, like I said, it's for lines of credit, it's for those long-term purchases. But if you are making purchases and you're putting it on your credit card and you're carrying a balance from month to month, that's going to have a negative impact on your credit. If you're making a minimum payment on your credit card on a month to month basis, it's going to have a negative impact on your credit score. Because what the Bureau looks at is they say, okay, well, we know credit cards are very high interest, 23, 24%, right? And the fact that you're carrying that balance from month to month and you're making minimum payments, that means that you don't have the resources and the capacity to pay off the credit card in full. And because the credit bureau knows that credit cards are not to be used like that, it's going to have a negative impact on your credit and it's going to bring down your score. And what happens is when you have these balances, and let's say if you're looking to buy a home, or you're looking to get a loan for your business, or you're looking, maybe you want to get a line of credit for just as a backup or emergency, the fact that you're carrying a balance on your credit card is going to impact how much you can qualify for these other lending facilities. So it can have a huge impact, and that's why I highly recommend that we budget and not put these things on our credit card when we cannot pay them off.
I love that. Thank you so much. I'll get to this question in the chat. SS, what precautions should I take to protect my finances from fraud and theft during the holiday season? That's a great
Mm,
question because we know that has risen as well over the years.
yeah, absolutely, absolutely. So that's a really great question. So I would say, in terms of fraud, it's really good to use your credit card, right? Because with the credit card, most credit cards have a policy whereby if fraud happens and it's not your doing, the bank will be able to reimburse those monies, right? You can also monitor your spending through alerts, right? So you can set alerts on your checking account, you can set alerts on your credit card. So if your balance dips to a certain amount, or if a purchase goes through your credit card, you get an instant alert and then you'll be able to act right away, right? So if there's, God forbid, if there was any fraud, you can call the bank, report it right away. They do their investigation and they make sure that you're reimbursed. So we have a lot of a lot of technology now that's able to protect us via our online banking and through alerts and account monitoring.
Very nice. I hope that answers your questions your question, SS. And please feel free to put your comments and your questions in the chat. Ricardo, again, it's a pleasure to be speaking with you, and thank you for sharing your wisdom and your knowledge with us today. We're just looking for any other questions. I will go to my questions then. Let's talk about financial wellness, which is something that we need to be speaking about throughout the year. How can I maintain, or how can someone maintain financial wellness and avoid stress? I think you've answered this in many other ways. I don't know if there's anything else that you can share just in terms of avoiding the holiday stress or avoid the stress during the holidays, in terms of accessing resources or tools. You talked about the credit card with the points system. Anything else that you can recommend in terms of financial wellness overall?
Absolutely. So I'm big on, like I said, financial literacy, right? And a part of that is reaching out for help, right? So I would highly recommend for all consumers to reach out to a financial advisor, right? Whether it's one of the big five banks or a credit union, wherever you have your relationship, you should reach out to a financial advisor, because just as how we, go to the dentist for their expertise and we go to the doctor for their expertise, it's the same with your finance. You need to be able to reach out to a financial advisor, have a meeting, and then talk about your short term, medium term, and your long term goals. And that financial advisor will be able to help you come up with a strategy to be able to make sure that you're hitting those goals. Especially within this economy, we realize with high interest rates, high inflation, and the contraction of the economy, what it's more important than ever, in my opinion, is to have emergency savings, right? So typically, what I discuss with my client is with emergency savings, it would be ideal to have 6 months of your expenses in a high interest savings account, right? And I know that can be hard for many people because if you're paying rent at 2,000 a month and your utilities another 500, it can be hard to save up 6 months of expenses in a high interest savings account. But don't let that deter you. Everyone can start from somewhere. Start with what you can, but you should try to have that 6 months of expenses set aside in a high interest savings account, just in case there's any emergencies, you lose your job, or you get injured and you cannot work, you have something to fall back on.
That is good. That's really good. Thank you so much. You talked about in the start of your presentation, you talked a lot about setting a clear budget for yourself. Now, some individuals are not necessarily good at budgeting. What sort of things should we be budgeting for? Or does BMO have any budgeting tools or resources online that people can access?
Yeah, absolutely. So every bank is going to have a budgeting app, right? And when you hear this word budgeting, don't be intimidated, right? It's not as complex as it may seem, right? So typically with budgeting, what you're going to look for is you're going to look at how much you're making, your after tax income, right? So what you're taking home, right? So that would be cash in, right? Then you're going to look at cash out. So what are my fixed and variable expenses? So your fixed expenses are expenses that are reoccurring on a monthly basis. They're predictable. They're the same amount each month, such as your rent, maybe your phone bill, your internet bill, etc. Right. So you're going to have your fixed expenses. Then you're going to have your variable expenses. Right. So your fixed expenses, you kind of have less control because they are what they are. Right. But your variable expenses, you have a little bit more control. So, for example, your variable expenses could be things like groceries. It can be eating out, it could be extracurricular activities, it can be treating yourself once in a while, whatever that looks like to you, right? So your variable expenses is something that if your budget is tight, you can make an executive decision to be able to tweak your variable expenses to be able to save more, right? So budgeting is very simple, right? So your what's coming in, right? Your after tax income, right? And I say after tax because you know your gross income is not going to help you, right? Because your gross income is what you're making on paper. So the most important thing is what's hitting your bank account when taxes are taken out, when CPP is taken out, and when employment insurance is taken out, right? And then you're going to have two columns, which are your fixed and your variable expenses, right? And within your expensive, make sure one of your expenses every month is you paying yourself, right? So putting
Mm.
some of your money into a high interest savings account or an investment because oftentimes we think about expenses as bills, right? But one of the most important things in terms of improving our financial situation is paying ourselves first. So that's going to look different for everybody, but that's something that you would have to review and make that choice.
I like that. And I have some comments regarding that. But before I do make my comment, SS says, my parents used to give me Canadian savings bonds as a Christmas gift. Talk about the practicality of gift giving. What
Yeah,
financial products would you recommend for child gift giving?
that's great. I love that. I love that. And Canadian savings bonds, they kind of been phased out now. We still get a couple of them from time to time in the branch that we cash. But in terms of what you can do for gift giving is what I've seen clients do as an example, is contribute to RESP, so Registered Education Savings Plan, right? So with a Registered Education Savings Plan, it's a educational plan for your children, and it's a great program. So the government matches a 20% contribution up to $2,500. So for every $2,500 that you put inside that plan, the government gives you a grant of $500, which is absolutely phenomenal, all the way up to $7,200. So you can get $7,200 of potentially grant money from the government for your child's education. The good thing is about the RESP plan is that not parents are not the only ones that can open it. So, as an example, a grandmother can open one up for her grandson or granddaughter, and they can be able to contribute money for their education. So that, I would say have a look at that, and it's kind of like the similar notion with your parents giving you those Canada savings bonds, right? So I'm sure they're giving it for you to be able to benefit in some way later down the line, and it's the same thing with the educational savings plan.
I love that. Thank you so much for that. You mentioned quite a few things earlier, just in terms of budgeting, and you mentioned about it not, let's not, it's not too scary and so forth. And you talked about, what to budget for and so forth. What about budget deficit? What about if your income and your expenses, they just don't add up, right? Or you're not getting enough income to cover your expenses? What are your recommendations for that?
Yeah, that's a great question. And it's tough, right? That's a tough situation to be in because it's not a sustainable situation, right? So again, budget deficit, you have to review what those variable expenses are, and you have to try to get down those variable expenses. There's certain expenses that you can cut out of your life if you make a concerted effort to do that. So just as an example, I get a coffee every day from Starbucks, and I pay $3.10 for the coffee. Why do I do that? I do it because it's a convenience spend, right? I go there, it's a part of my morning routine. I feel comfortable doing that. I have an espresso machine at home, right?
Yeah.
So it's it's going back to, can we get away from those convenience spends? Another thing I think about is um, eating out, right? Eating out at work, right? Again, I live 15 minutes away from home, and I've been doing better, but sometimes maybe 2 or 3 times on a weekly basis, I eat out for lunch because it's a convenient spend. It's more convenient for me, and I can go back to work right away. So instead of doing that, maybe you to add to that, it's around $14, $15 every time I go out. It's downtown, right? So again, looking at that and saying, okay, let me invest the time to do meal prep instead, right? Let me, instead of buying my groceries from Loblaws, let me go to No Frills to buy my groceries and pocket those savings. And these are the things that you can do, is minimize these kind of convenience spends, that you do it out of convenience or laziness, if you want to put it that way, and to be able to bring your budget in line. The other thing I would say is, and this is a more, of course, difficult one, is that we need to work on career development, right? Because if enough money is not coming in, that means that you need to be able to get a job that can pay you more, right? And a part of getting a job that can pay you more is working on yourself, right? So whether that's a certification,
Mm.
whether that is going back to school and networking and being able to formulate those relationships that you can actually get where you want to get. Because when it comes to budgeting becomes a whole lot easier when you're making more money, right? So those are a couple of things I would say is you can have a look at and see what fits your situation.
Very nice. Thank you so much for that. And we have a lot of entrepreneurs on the line, including myself as well. I know you talked about basically building capacity building for entrepreneurs. Would your recommendation be the same for them in terms of upgrading their skills, increasing their skill sets, and so forth? What other yes, to
Yeah,
bring it. So what other? Okay, go ahead. Go ahead.
yeah, more. I think that's a great point, and because you're an entrepreneur, doesn't mean that you don't need to develop your skills, right?
Hmm.
And depending on the space, it's going to require a certain skill set, right? So, but what I would say is all entrepreneurs have a component of business development, right? Whether you are a new entrepreneur or a very tenured entrepreneur. So you need to be able to work on your business development for your business. So what does that mean? That means being able to network, right? Being able to work on your written and verbal communication skills, being able to um, market yourself to your consumers in whatever space that is, right? So, for example, myself, I'm in banking, right? So my business development was getting my certified financial planner. I didn't need that for my role, but that's a part of my business development. So when you're an entrepreneur, you're
Yeah,
always going to have that aspect of, okay, how can I grow my business? How can I legitimize myself, right, in the eyes of my consumer? And sometimes that takes career development.
I love that. I love that. Making yourself more marketable. That is really, really good. And that goes both for the career professional as well as entrepreneurs.
Absolutely.
Yes, no, I'm so glad that, thank you for the information. And I hope those individuals that are here with us today that you're gleaning and you're taking notes. I'm always taking notes. So thank you once again. Let me just check the chat just to see if we have any questions. We have a couple more minutes. So we do have time for a couple more questions. Feel free once again to put your virtual hand up or just put your question in the chat. We're more than able to, or Ricardo would be more than happy to answer your question. Ricardo, as we're talking about entrepreneurs, I do want you to share a little bit more about the programming at BMO. You mentioned it earlier in your introduction. I think it would be very useful for the audience members who are joining us today, who are entrepreneurs and who have had difficulties with securing capital for their business. And oftentimes, from firsthand experience, cash flow is a big issue for many of us. What would you recommend? And maybe you can share a little bit more about how your what is it, zero barrier program, how that will help an individual who might be faced with financial challenges as an entrepreneur.
Absolutely, absolutely. So I'll tell you a little bit about the Zero Barriers program. I'm super excited to be a part of it. It's a purpose program, meaning that, you know, we're in it to make a difference, right? And with the Zero Barriers program, I'm going to focus in particular on the Black entrepreneurs. So we are empowering Black entrepreneurs through funding, education, and partnership. So BMO has recognized that within our community, there has been challenges in that Black entrepreneurs have historically not had the access to credit facilities, not have the access to the support of the bank, and what that has led to is a lot of entrepreneurs end up operating their business out of their checking account or their personal credit card, and that's led to negative consequences for them in terms of their credit history, right? So, what we're trying to do is to recognize those historical disadvantages and being able to help our entrepreneurs grow their business and be successful within the entrepreneurship space. Now, the Zero Barriers program, in particular with the funding, we can help Black entrepreneurs with up to 25,000 if you are new to BMO. If you're an existing customers, depending on your situation, we can look at doing a little bit more than 25,000. With the program, because it's a purpose program, the credit requirements are a little bit lower. So we can work with an entrepreneur, with a new entrepreneur with a credit score, a minimum credit score of 650, and an existing entrepreneur, a minimum credit score of 620, right? So some of the challenges that we've noticed within the program is definitely the credit bureau struggles and the credit score, but also with creating a business plan, creating projections, navigating the personal net worth requirements of the program. And we actually have partners that will be able to help our Black entrepreneurs address some of these issues. So, for example, we work with the Canadian Black Chamber of Commerce that will help entrepreneurs in terms of creating a business plan, help with their projections, and then they also have a credit repair program. So they help you to repair your credit bureau to make sure that you're ready when it comes time for funding. So if you come to me as an entrepreneur and you're looking for financing, and we're unable to provide you that financing because of your business plan needs work, or there's room for improvement for your credit score, I would refer you to our partners at CBCC, and they would help you get to where you need to be, and then you'll come back to the bank, and then we'll help you with the funding once they take care of you. So it's a super it's such a great program, and I'm so happy to be a part of it. And we've been seeing tremendous success since the program's relaunch in June. And it's my job to make sure that our community knows about this program, right? I think you're on mute, Moy.
You've been excellent. Thank you so much for sharing, not just about what BMO is offering for the community. And I hope you were all listening in. And I do want you to put your contact in the chat as well, Ricardo, before we leave. But thank you so much on behalf of the BBPA. I think